So, Daniel, good morning, and thank you very much for joining us. And I guess the key question that I've got today is what you think the pandemic means for the investment management business.
Thanks, Will. It's good to be here virtually. I think there are a number of different dimensions to this that impact the investment management business in different ways. The first way, of course, is that in the short term, there's been a very sharp and sudden shock to markets. And because our revenues are proportionate to the assets we manage, that in turn will have an impact on the revenues for some businesses. We do not yet know how persistent the impact of the crisis will be, and so we don't yet know for how long revenues will be lower. But obviously there is a risk that revenues might be impacted for a prolonged period of time, in which case that might be challenging for some businesses within the investment management industry. It's also true, of course, that weaker returns create challenges in terms of raising assets. So naturally, clients tend to be more risk averse during periods when returns have been bad. And that tends to make it a bit harder to raise assets in the future, at least for some groups of individuals. So normally what happens is that asset raising becomes a little bit easier once we've experienced a period where volatility has declined and returns have stabilized a bit. And so, again, very uncertain outlook at the moment, but hopefully that will materialize over the next few months. I think there are other dimensions as well. For example, generally one would expect there to be an increase in defaults in private sector corporates, and that clearly has implications for more specific parts of the industry, notably the high yield debt component, but also parts of the business like leverage loans and so forth. So there will be those specific parts where it's going to be more challenging, but of course for diversified businesses, they should be protected by returns in other parts of the business.
So in this environment, making sure that capital allocation happens efficiently requires people, I suppose, to be competent at analysing capital structures and the operating environment for investee companies very carefully. So is this the sort of environment in which you would expect a greater focus and a greater value to be put on sort of professional and ethical skills?
I think in any crisis, there's lots of opportunity for people to behave badly. And of course, if individuals can demonstrate that they behaved well, selflessly, and in an ethical manner during what are very difficult and testing conditions, then that, of course, should be applauded. I think that in terms of capital allocation, and in terms of generally making investment decisions, as ever during these very difficult times, because of the volatility, our short-term vision through the fog is very limited, much more limited than normal. But we still have a pretty good angle, we think, on the long term, and it pays to try to be as objective as possible and as unemotional without getting caught up in the behavioural traps that we have all become more familiar with in recent years. And this is, of course, tough to do because the behavioural biases are so strong and so inherent and so part of being human that they are very difficult to avoid. But I think, nonetheless, it is helpful to try to look through and be objective and think about where are we going to be in, say, 12 or 24 months' time. It is tough anyway, whether you're making capital decisions, whether you're making just general investment decisions, whether you're making asset allocation, timing decisions. These things are all tough because they are ultimately judgment calls based on analysis. And we are all trained in much the same way. We'll have access to the same data, and we are all CFA charter holders, so we've all gone through the same qualifications. But nonetheless, ultimately, whilst the analysis might be similar, it will boil down to judgment calls. And that, of course, is what makes a market.
So I suppose one of the things that we should be doing at CFA UK is having more events and providing more content around behavioural analysis and understanding behaviours. What are the other key impacts, as far as you can see, on CFA UK itself?
I think for CFA UK, this is obviously a challenging period because we very much enjoy and think it's important to stay in contact with our members. And that, of course, is more difficult when we can't run events and we can't meet our members face to face. At the same time, it, of course, has meant that we've had to be more creative and think about ways that we can support our members during these really unusual conditions. And that means that we've thought more carefully about our digital strategy. We've thought more carefully about how we can provide exams and other resources in a virtual environment. And that's something that we were looking at anyway, but that we've decided to accelerate because of the crisis. And just generally, it's helped us think about ways in which our members will need to be supported through these really difficult times. So it's tough for CFA UK, but it also provides a great opportunity for us to demonstrate how useful membership of the society can be during what's a really challenging environment.
Daniel, thank you very much indeed.
Thanks, Will.